session with Craig. Craig Hobart is the head of distribution with Monochrome Asset Management. So here was my quick chat with Craig to discuss the digital asset issue. Hi, Craig. Thanks for joining us today. Could we start by finding out what Monochrome is doing in the digital asset space and why?
Well, thank you, Darren. It's great to see you again. I thought I'd start by talking about my background so people get a sense of why I'm involved with this venture and what we're doing. I've been in traditional investments for 27 years now, having been a former CEO of one of the largest fund managers in Australia, managing in excess of $23 billion. And more recently, I was on the executive of one of the largest industry funds, managing $59 billion in assets. And through those experiences and others, I've witnessed firsthand how important it is for investors to be well informed. And I'm relatively new to digital assets, but in the short time that I've been involved, I've seen a lot of misinformation as well as information disseminating across this asset class. So my role at Monochrome is to lead distribution and the customer experience. And what we really committed to doing is providing advisors and investors with a safe place to learn and try and make sense of it all without any judgment being attached to people's decisions about what they in the end decide to do. We completely accept that digital assets isn't for everyone. So Monochrome is a digital asset manager, and our first product is our Monochrome Bitcoin fund. And that's where we're starting our journey with the market.
So speaking of providing more information, can you quickly tell us or explain for us what Bitcoin actually is?
It's a great question. And, you know, Bitcoin is the original digital asset currency launched nearly 13 years ago. While today there's over 7,000 digital assets available to be traded, Bitcoin is the most mature and the dominant one. Over 89% of all Bitcoin that is going to be mined has been mined, and it now has a market cap of $968 billion US dollars, which is in excess of 1.3 trillion Australian dollars. It isn't issued by a bank, but rather uses blockchain technology for it to be managed as a decentralized ledger. It is quite different in that regard. It's a new asset class. It's yet to be defined. Due to its high volatility, it has been described as being part of the growth bucket in people's portfolios.
Just continuing on that theme, Craig, would you be able to provide us what the main characteristics of Bitcoin are?
Sure, Darren. Well, as I mentioned, it is actually has a high volatility attached with it when you compare it to traditional assets. So what I've done today is just prepared three charts, which I'd like to share with the audience, to share the three main things that we look at from a traditional investment perspective. The first is risk, also described as volatility. The second chart will be a correlation chart looking at how this Bitcoin behaves relative to major asset classes. And the third is, if you did introduce it into a balanced type portfolio, how would the overall portfolio behave with Bitcoin being part of the mix? So let's start with the first one, the volatility chart. Now, these were prepared by Morningstar. And what we can see is we've used a typical 60-40 fund just to illustrate the volatility that occurs in a balanced portfolio in aggregate. And of course, the volatility in that situation is very low because you have one asset class offsetting another asset class. And so they smooth each other out, relatively speaking. And then we've added the volatility of Bitcoin itself. And you can see how volatile, in fact, this particular asset is. And so we've deliberately wanted people to understand how that works. The second chart is the correlation chart. And it deliberately looks at how does this asset class behave relative to global equities. And we can see for a long period of time there's a very low volatility. And then in the last segment, it has spiked up since March 2020. It correlates, the correlation we believe is a combination of equity markets rallied strongly post the stimulus that was provided. And at the same time, it also illustrates the time that Bitcoin did in fact rally itself. On that same chart, we have the bond market, and you can see the correlation between Bitcoin and bonds is also very low. So that sets us up nicely now to look at what is the impact of putting this highly volatile, lowly correlated asset into a diversified portfolio. What we did is added 1% to the portfolio. The base case is actually underneath that, you can see, is a 60-40 product with no allocation to Bitcoin. We added 1% and reweighted it monthly. And you can see the impact of the discipline of reweighting. It's kept the volatility low, but it's added performance over time. And then as an outside example, we added 5% to see with that monthly rebalancing what that would also look like. And you can see that that added significant value through that period. I must point out, we're not making a recommendation here. We're just illustrating what would have occurred had you had access to Bitcoin through that period of time and applied that asset class to the portfolio through that period.
So at the moment, Craig, what sort of investors are being attracted to Bitcoin, and why do you think that is?
Well, initially, Bitcoin was owned by the people that were close to the original idea. Later, digital natives and then consumers began to flock into the space. Only more recently, after nearly 10 years of the operation of the Bitcoin currency, have companies and institutions started buying. We've seen large companies in the United States like Tesla and Square invest in Bitcoin. And we've also seen large investment banks and institutions starting to allow their distribution to allocate into Bitcoin and digital assets in a client's portfolio, JP Morgan being the most recent one of those. Within the Australian context, the Australian Tax Office estimates that over 600,000 Australians now own digital assets. So it is becoming a very popular asset class indeed. And there are a range of reasons why people are buying it.
And just to finish off, Craig, could you give us a quick overview of how the Monochrome Fund works?
So at Monochrome, we made the decision that we wanted this to be a very conservative offer. It's a buy and hold strategy. We buy the Bitcoin and put it in what we call cold storage through our custody provider in the United States. We don't use synthetics or any derivatives or futures to get exposure to it. It's actually buying Bitcoin itself. It's a wholesale product scheme that is offered only to wholesale investors. And you need to qualify as a wholesale investor, of course, to access it under those terms. It has monthly liquidity. It is a buy and hold product. It's designed not to be bought and sold or used as a trading account to trade Bitcoin.
Okay, that was great. Well, I'd just like to thank you again for joining us today, Craig.
Well, you're welcome, Darren. Thank you very much for having us involved with your great day.
Hi, I'm Jeff Yu, founder and CEO of Monochrome Asset Management. Through our investment-grade Monochrome Bitcoin Fund, we make digital asset exposure safe and easy for you. Our team with over 100 years of combined experience in traditional and digital asset management have put together Australia's leading Bitcoin fund. The fund we have created for you works within conventional accounting and taxation frameworks. More importantly, it protects our investors from the technical and compliance risks associated with managing their own blockchain wallets. Start a conversation with us today at monochrome.co.
Okay, well, thank you very much to Craig for having that chat with us.
Good morning, Darren.
It's good to see you. Thanks for being with us today, and thank you very much for discussing a a subject that I think a lot of SMSS are asking questions about. We're certainly seeing some statistics to say that more SMSS are interested in investing in digital assets and this asset class. You mentioned during your presentation that the correlation between asset classes and digital assets or Bitcoin is not very high, which is great for a diversification perspective. But as far as market movements go, so I believe that there is a situation in China where one of the organizations is struggling and it might become the next Lehman Brothers. And of course, we know what happened to Lehman Brothers during the GFC. In circumstances like that, how is Bitcoin placed with any sort of portfolio protection or what sort of benefit will you get from Bitcoin in that area?
Well, Darren, that certainly wasn't a Dorothy Dix question. So let me do my best for everyone today. And of course, I just want to reinforce that we're not giving advice today, and we offer it through a wholesale vehicle. So for you to access us, you need to qualify as a wholesale investor. I think the first thing I would say is what we're discovering with, or one of the areas of discovery and consideration for Bitcoin is its role in what we call long volatility events versus short volatility. So it's been accepted that all asset classes have gone up, and I think we could all collectively say it's hard to find value anywhere at the moment. Doesn't matter whether it's bonds or equities or property. We can see it in secondhand car prices. It's everywhere, this problem with value. So the market's trying to discover ways of actually preparing themselves for the event of a correction where everything gets rebased. And some people are saying, and we don't have a view, but I'm just sharing what people are saying, is that Bitcoin may actually be a form of insurance against those kind of market events. Some would say gold has traditionally played that role as well. There are other, obviously, more technical ways of protecting a portfolio that really isn't for self-managed super funds. But it's just an interesting discussion that's occurring. So this institution in China, was it a bank, did you say?
I'm not 100% sure what business it's involved in. I'm assuming it's some sort of financial business, but
Right.
reports are it could be the next Lehman Brothers type situation.
Yeah, right. Yeah. Well, that we'll see how that unfolds. But I guess what I'm expressing is, that's why you have a diversified portfolio. It's why you don't have all your eggs in one basket. It's why you look for assets that have different behaviours in different times in cycles and markets. I think all traditional investors advocate for that. I think what we're discovering is how Bitcoin may play a role as a form of long volatility. They call it insurance against a market event that might spill into a broader market event.
We're getting some questions through now, Craig, which is fantastic. First one is, does the fund have insurance?
As a wholesale vehicle, we operate through a trustee. Our underlying custodian in the United States does have insurance, and we lean on that for the purposes of the fund.
What is the minimum investment amount for the fund?
Thank you, Martin, for your question. The minimum investment for the fund, we've just updated the information, the IM, and it's now $25,000 is the minimum investment. And once the fund's set up, we'll take $5,000 additions to the initial balance as well.
Okay, Glenn's asked, how do you convert any profits to cash?
That's a great question, because a lot of people assume there's a lot of exchanges in the crypto space that are starting to talk to the self-managed super fund market. And I wanted to make a distinction of why this is different. Exchanges aren't regulated. So there are no consumer protections for people that invest through crypto exchanges, and that needs to be understood. And if you're the trustee of the super fund, I think you need to also understand that implication. What we've done separately is set up the trust as a wholesale trust, and you buy units like you do with any wholesale trust. If you were the Magellan Fund that is a sponsor with us today, if you were to invest in their vehicle, you obviously write a check or transfer money into the holding account that then go into their trust. It's exactly the same mechanism that we're applying at Monochrome. So it makes it easier for your accountant. Also, at tax time, you'll be sent the normal kind of end of year tax information that you can input into your self-managed super fund. You don't have to worry about holding keys, wallets. You don't have to worry about any, like if someone loses them, you've lost them. We manage all of that. You just apply like you would for any other investment. We invested on behalf of the unit holders. That's how it works. And if you redeem, you get cash back. It's just the way it works.
Charles has asked.
Yes, and of course I can't answer this question because this would be advice. What I can say is you have a look at what people are saying. There's some great articles from Forbes magazine in the United States that's a little bit ahead of the Australian market in terms of the advice industry, and most of those people are expressing what they have discovered with their clients is the allocation seems to be between 1% and 5%. But I would say you must speak to a financial planner about your circumstances. I'm not advocating a particular view here, but that's what we've seen as the experience. Those that do employ Bitcoin in a portfolio, it appears to be that's the kind of allocation that those people that are comfortable with it and have considered all of their situation are applying.
How do you think Bitcoin would perform in another GFC? I suppose in some ways it's an extension of one of the first question I asked.
Yeah, well, the GFC was actually the genesis of the start of Bitcoin. That's the irony. It's this extraordinary consideration that can the traditional financial system be trusted? And that was the genesis for Bitcoin coming to existence, is rather than relying on fiat money, there's a community-based currency that's decentralized, and that's why in effect it came into existence. In fact, in the original issuance of the first coin, the code embedded in that relates exactly to the crashing of one of the Lehman Brothers event, I think it might have been, is actually embedded in the code. That's how significant it was to the originator of this idea. No one will know how anything will perform in a GFC event. It's only in hindsight that we really discover the underlying effects of this to that. Again, that's why diversification is so important for investors, is so that they spread the risk of all events across all circumstances. I have shared it earlier in that earlier question about potentially Bitcoin being a long vol protection, but that's unproven. We won't know until it occurs because it hasn't occurred. There hasn't been a GFC with digital currencies in existence. So I guess the proof will be in the pudding when that occurs. And let's hope it doesn't.
Certainly, let's hope it doesn't. Diego has asked, in your view, what is the risk associated with changes in the regulatory compliance space resulting in prohibiting Bitcoin investments?
Well, first of all, I would like to share with Diego is we're an advocate of regulation. The reason we've come into existence is because of the lack of regulation as a business. We are very concerned about that. It's hard to know overall what the impact will be, other than we'll see more regulation means there's more control over the behaviour of the participants in the asset class. And I think more importantly, regulation will also provide a pathway for advisors and the traditional investment industry to embrace it. PI cover for advisors, it appearing on approved product lists, super funds investing in it. I think all of those things there'll be, my sense is there's resistance today because of that regulatory vacuum, relatively speaking. But once those things are resolved, I think it will become more considered. As it stands today, ASIC doesn't know how to position digital currencies vis-a-vis other alternative investments or other asset classes. And they've just put out a discussion paper, which we very actively participated in, to discuss with the market some of the options that might work for answering that great question of Diego's.
I think
How long to
looking
invest for?
Indication, a rule of thumb of how long to invest in.
Well, I'd probably ask Gina, what do you think? The reality is it's very volatile, right? So what do you do with volatile assets? You put them in the bottom drawer and not trade them or touch them for a long period of time. The only concession here is we've advocated rebalancing. So some of the volatility you want to observe and then either increase or decrease your allocation to the currency if you use that as a strategy. But underlying, it's called a growth fund because it fits in the growth bucket. It's like a 7-year plus investment horizon for something that exhibits that kind of volatility. It's significantly higher volatility than equities, and equities is a 5 to 7 year investment.
Marie says, you say that Bitcoin may be an insurance to a market pullback. How do you estimate this?
It's not my opinion. It's what I've read and what I've had discussions with professional investors about. One of the things that's a market concern is that there's a rebasing of all assets and there's a correction. And in the event of traditional markets failing in some degree, people will be looking for places that aren't directly affected by that event. And the reality is it looks like Bitcoin might fit into that category, a bit like how gold has in the past. So there is no proof because it hasn't happened. It's just something that people are talking about, and it's a diversification strategy against what they call a long vol event, a long volatility event, and And we have discovered that it is lowly correlated with asset classes as well. So it may come back, but it may not come back. If history is a guide, it certainly appears to have its own behaviour independent of other asset classes.
Craig, we've got a few minutes left. I suppose if there's no other questions from the audience, I'll ask you a couple. They won't be really hard ones. You mentioned through our interview that the Monochrome Asset Management Fund is a wholesale offering with, I think you said minimum investment of $25,000. What proof or verification do you guys need for SMSFs to show that they're sophisticated investors or they qualify to invest in the fund? Is there any requirement for them to prove that?
Yeah, a wholesale investor is actually definitional. It's actually like a legal term for, do you qualify as a wholesale investor? Some people use the term sophisticated investor, but it's actually wholesale investor is the actual legal term. What you need to be a wholesale investor is have $2.5 million of assets or have earned $250,000 a year for the last 2 years, or have been a professional investor, managed investments in excess of $10 million on behalf of others. So, and the way that you prove that is there's a form you can download from our site for our application process, and you take that to your accountant, and they will sign off if you meet that criteria. And that's what our trustee requires as evidence, and we put that on file so that you can access that wholesale fund.
Okay, fantastic. Well, I'm being given the wind up now, Craig. So I just want to thank you very much for your time today. A great discussion that we had, really relevant topic. And thanks for being with us during the day and for presenting this session.
You're welcome, Darren, and good luck to everyone out there. It's great that you're taking such an interest in your retirement. Well done. Thank you.